Hello there, this is James, and you are watching Tixee Live. In today's program, we'll discuss a little bit so far about the NFP. What's the initial reaction the market has taken to it, and then we'll have a look a little bit about, obviously, a little bit about what a week it's been, because it's been a really, really interesting trading week. So we'll do a bit of a recap. But before we get into that, don't forget, these little episodes are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. I always struggle with that word at the moment, due diligence. Anyway, you know what I mean. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, what a trading day. What a trading day. It's been quite interesting. Obviously, the European session, we looked at obviously the bull moves this morning with the cable, the euro, and gold on the back of ADP. We have since obviously had NFP, which has changed the tone slightly, and we'll go through that and we'll look at that. Now, those of good people who were kind enough to watch the announcement with me, as you know, there was a surprise. It was a surprise. Non-farm payroll was announced at 390,000 versus 320,000 expected. Okay, so that was a big surprise. They weren't expecting that. And as you remember, I went through the list of banks. Only two banks had a high anticipation for the payroll. For the NFP. The rest all thought it was going to be around the 320 and 325 level. That was Societe Generale, who thought 440,000 was their number, and obviously who else? Westpac, who thought 370 was the number. So they're both pretty close. Obviously, Westpac was the closest. If they had bets between each other, Westpac would win because they had 370, certainly closer to the 390. So that is a bit of a surprise, and we'll talk a little bit more about the market reaction on it so far. Okay. Other things which were announced at the same time, obviously, US average earnings, okay, announced at 0.3% versus 0.4% expected. So that was slightly disappointing, but again, we'll go a bit more into that in a bit as well. And of course, we had US unemployment announced, and that came in disappointingly at 3.6 versus 3.5. Okay. However, what I will say about the average earnings and then unemployment, it was the same as last month. So both were disappointing, but not drastically that disappointing if you think about it. 0.3 was the number last month for average earnings, and 3.6 was unemployment percentage for the US unemployment last month as well. So they basically just followed suit. The thing with the NFP, okay, yes, it's higher than anticipated, but don't forget that's still a drop-off. Still a drop-off of last month where it came in at 428,000. Not a dramatic drop-off, though, a drop-off of 38,000 jobs, but that's still a drop-off. So there still is hints that maybe the labor market is sort of like considering it as labor market is slowing down a little bit. But again, as I mentioned in my live watch-along, how would the market perceive this information? I mentioned good news is bad news and bad news is good news. In other words, if it's good news, okay, and the job market is better than the NFP was better than expected, maybe the market will consider this as bad news, but the Fed will be aggressive with interest rate hikes. So we will see a bearish tone, okay? If it's bad news, which it is slightly for average earnings and for unemployment, but like I said already, it was just the same as last month. Bad news, it'll be good news, as in the market will be bullish and will think that the Fed will slow down on their aggressive interest rates hike. So at the moment, I think the market is feeling indifferent, and we'll go through the charts and the instruments and the assets we were looking at before and see the reaction initially and see how it's been engaged. But I think at the moment, the market is seeing it as a little bit of bad news because, again, though it's lower than last month, it's better than what everybody expected, and it's only less by 38,000 jobs. So maybe the Fed will see that as the labor market can handle interest rate hikes. So let's see how that plays out and how the market reacts to it, really. So let's have a look at the current market reaction. We'll go back to look at the instruments we were looking at when we were going live. Okay, so first up, we have gold. Sorry, I get so thirsty because I talk so much. Right. Little after the announcement, we said it spiked down, but like I say, often takes the market a little time to digest. And then we saw gold really break through that level of $1,864. Okay, and it actually, in fact, it came all the way down, dropped all the way down to nearly $10. $10 downwards at $1,855. It's since recovered slightly after that. It was quite a big drop for a short period of time. It has since recovered slightly and it's now currently trading at 1,859. So we've got a little bit of buying in. So yeah, there is dollar strength on the back of NFP, minor dollar strength. Okay, and I'll tell you why I think it's minor at the moment. It'd be interesting to see really what happens in 9 minutes, and hopefully I'll still be online so we can look at that together. Dollar Swiss, where dollar gained a lot of strength against the Swiss on the back of that NFP announcement, but currently it went all the way to 0.9635 before obviously having a little bit of selling, because sometimes often if you have quite a big move quickly, the market does profit taking. So currently it's around 0.96172. Euro dollar, again, same pattern with gold, did fall off. Okay, did drop down on the back of the NFP number, trading now around 1.07055. No, fell, all the way down to 1.07055. Has since recovered slightly and is now trading around 1.0725. Cable, British pound, US dollar. Okay, remember the time beforehand we were trading round about that's key area of interest, that level we've been watching for so long now, 125.54. When it dropped below that, went as low as 125.23. But then it since has recovered slightly and it's trading now above the 50-day moving average around 125.42. So a fairly, bit of reaction to it, but still fairly muted. The reason why I think, obviously, we had the initial reaction to it, which has since sort of slowed down a little bit. Obviously, the European session, okay, is a little bit thin on liquidity. Reason being, I mentioned this morning, the UK is on holiday. And when it does come to currencies, the UK and London is a major player in the market. So obviously London's sleeping, so to speak. Well, actually, London's having a bank holiday, and I hope they're having a lovely time. So it'll be interesting to see what happens in 7 minutes. 7 minutes when the US session opens. Okay, when the US session opens, we'll see how the US react. Will we see dollar strength? Will we see a nervous market thinking that the NFP number was better, average earnings was not that bad, and that the unemployment was not that bad, it's the same as last month? And will they fear that the Fed's going to be aggressive? So will we see a lot of dollar strength, or will we see a reversal of the current mood set at the moment? That'd be interesting to see, and that'd be due in, say, 6 minutes time. And like I say, we'll have a quick look. Obviously, when I'm going to be, it's about 6 minutes, so hopefully I'll still be online so we can still see it. So anyway, not just a busy trading day. That's really nice, actually. That's touched me, actually. That's touched me. Very nice comment. Thank you very much, my friend. I really, really appreciate it. I really appreciate it. Thank you very much. I'm here to help. I really like your interaction and any interaction, anybody talking to me. But thank you very much. That's it's made my day. Thank you. Like I say, what a trading week. What a trading week. Not just a trading day, but what a trading week. I've written down some notes because there were so many things this week which happened and which drove the market, which has been interesting. First of all, Monday we had the EU trying to show muscles in Brussels. Okay, we had the EU summit. Okay, where they were trying to agree on a deal to ban Russian imports into Europe. Okay. And it took a couple of days. Hungary was proving an obstacle. They weren't agreeing to it. They finally did agree. And anyway, they finally did agree in reason. And it was announced the EU will ban up to 90% of Russian oil imports by the end of 2022. Okay. On the back of that, oil obviously got very bullish because of supply issues. And we talked about potentially it returning to the highs of March. Eyes of March. It sounds like I was saying like that from Shakespeare. No, the highs of March, okay? Where obviously Brent was around about, got hit around nearly $130 a barrel, and a WTI back in March was around about over $126 a barrel, around that sort of way. So we were talking about those levels. And then the next day, rumors went around that OPEC was going to block or ban Russia, not ban Russia, or not include Russia with any oil production deals, and which would leave potential room for Saudi Arabia and Kuwait, United Emirates, to increase oil production. And then oil then became under pressure, and we started looking at whether or not the bull run was over. And it did drop. It dropped quite dramatically. And then, this is what this week has been about. Then we did get the rumor that OPEC will increase production. And then again, yesterday, we got the announcement that they will increase production to 648,000 barrels per day, as opposed to the current number of 432,000 barrels a day. Knock-on effect by the rumor itself, the fact oil started to recover. And as well as that, then the market got concerned, okay, that because of the likes of Angola and Nigeria are not hitting their current production targets, that number of 648,000 barrels will not be delivered. Then also slip in the fact that China is now coming out of lockdown, so demand might increase. And what we've seen oil again rise up. And I tell you where it's currently trading at the moment. It's been a roller coaster with oil to this week. If I have a look at Brent, it's currently trading $117 a barrel. The low of the last couple of days was around just under $112 a barrel. So that's a big turnaround. Oil, WTI, that's currently trading at $116 a barrel, with the low of the session was just above $110 a barrel. So what a turnaround for oil today. So there we go. That's been the major thing of today, of this week, actually. And then, of course, now we've got NFP, which came in better than expected. So that's interesting to see how the market reacts in 2 minutes time. Like I say, if I look at it now, gold's trying to recover around 1,861, and euro dollar is trying to recover. It's trading 1.0735. So it'll be interesting to see how the market does it. Okay. I've got another great question. We'll have a look. We'll pull up on the charts and have a look. Actually, another great question. Do you see the US dollar, Japanese yen reversing any time? The RSI seems high. That's a very good question. Let's have a look, shall we? Let's have a quick look at the dollar yen. There we go. I don't know why I'm humming there. Okay, obviously, dollar's had a lot of strength against the yen. It suffered a little while back when the yen was chosen as a safe haven. The RSI is this. I mean, interesting. I always look at longer charts to indicate the RSI. It currently is a little bit over 70. So it is over 70. So it's probably indicating that it's potentially overbought. But like I say, it's got to be quite dramatic. I think the influence has been with dollar over the last couple of sessions. If we have a quick look on the 1 hour as well, okay. Obviously, like everything at the moment, it's having a little bit of a dollar sell-off, but not that dramatic. So let's have a quick look, see if we can see something. Let's have a look, see if we can see a potential key area here. Let's have a look. I often try and look for areas of interest where people have sold from before, or where levels have been acting for a resistance. And we're around that sort of level now. So if we look at it on a 30-minute, we're trading around that level, 130. So yeah, like I say, it'd be worth watching. Let's see how it handles this level. And let's really see how the US treats it. Yes, you're right. The RSI, certainly on a 4 hour, is just above the 70, indicating potentially it's overbought, but the RSI is not always perfect. I'd be interested to see how it reacts around this area now at the moment. Okay, so that's been interesting to watch. I mean, we're still way above the 20, let's say the 200-day moving average, and as you can see on the longer term, there has been a steady uptrend of the dollar. I mean, the trend's your friend, but let's keep an eye on this area of interest, 130.46, and see how it handles it in this session, but certainly on Monday morning when Asia is awake as well. So, but brilliant question. Thank you. Really good question. What else was I going to say? Yeah. So what else did we have? Blimey, it's been a busy week. It's mainly been about oil this week, and I love talking about oil. Don't get me wrong, I really do. It's been mainly talking about oil. Did I actually share my chart with you? Did I share this? Yeah, you see what I mean? There's the level I've looked at. I'm keeping an eye on 130.46 RSI, as you rightfully said, is slightly over. I wasn't quite sure if I've shared my chart. Sorry, but yeah. Anyway, what was I going to say? So yeah, oil has been the main topic of the day, of the week. Sorry. So that's be interesting development. It's going to be really fascinating to see how the US reacts. In fact, the US is opening now. Let's have a quick look. See, obviously they've got to wake up, get their coffees and all this before they start taking action. Right, no real response at the moment in the US. Let's have a quick look at S&P 500. Okie dokie. This is interesting. Let's have a quick look at this. Oops, daisy. Okay, let's just 4 hour. Let me show you this. Let me show you this. Yeah, see, obviously the S&P again is a little bit down. It's trading at the moment 4,137 points. So it's a little bit bearish with the S&P at the moment. So maybe let's say like the market is thinking good news is bad news. It's currently trading above the 200-day moving average though. So that's acting as a support currently. So again, like I say, the US market is only really just waking up. So be interesting to see how it goes on that. Okie dokie. Okie dokie. You're welcome, my friend. No, thank you. Thank you for the questions. I really like it. Okie doke. Right. This has been a busy week. It's been a hectic week. It's been an exciting week. I'm half exhausted, half excited, but we've got another week coming up, another massive week coming up. And these are the key events we got next week. EU GDP, gross domestic product, ECB interest rate decision. That's a big one. And I think bigger than that will be the ECB press conference. Because remember what I discussed a couple of weeks ago that the ECB were fighting amongst themselves about how aggressive they should be raising interest rates and all that. That's going to be interesting what they say in the press conference. Are they gradually going to raise interest rates, or are they going to be aggressive with it? Because some people want them to be aggressive. Some members want to be aggressive, but obviously Christine Lagarde, the president, she wants to be gradual. So it'd be interesting to see what they say in that press conference. I might, though it'd be difficult for me to do a watch along because I'd be broadcasting the same time they're being broadcasted. I will certainly do a special on the press conference and explain what it means or what was said. And as well as that, next week we have US CPI. So that would be a nice one to look at, see how high inflation is again, which will then give potential fears to the market that the Fed are going to be aggressive. So we could then see dollar strength again, okay, as in safe haven strength. And we could see risk appetite off the table based on that US CPI, sorry. So see what they say. Okie doke. Okay. Well, that's it for today. It's wrapped up for the week as well. It's been a really great week. I really enjoyed it. And thank you all those who joined and come along, especially this gentleman here has been asking really good questions. And that's what I'm here for. Please feel free to ask me questions. But anywho, on to next week. I look forward to seeing everybody then. So on that note, if you're watching me on Facebook and you like it, by all means, give us a follow. If you're watching me on YouTube and you like it, by all means, give us a subscribe and maybe click the notification so you know the next time I'm going live. If you've enjoyed this little video and find it insightful and interesting and hopefully enjoyed it, maybe give me one of those. It certainly make me start the weekend off with a smile. So anyway, on that note, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I do suggest you do your own research and do your own due diligence and know the risks, of course, before entering any trade. Till next time. And plus another thing, everybody have a fantastic weekend. Anyway, till next time, all of you, trade safe.